Hello, everybody. I think we have a good level of participants now, so we can start. As you can see, the presentation will be recorded, so we can share with you the video afterwards. And also, we will be sending the presentation to all attendees. Questions will be available to be made at the end of the presentations via the chat, okay? So I will start introducing myself first. I'm Ezio Filippi from ChemOrbis organization. I look after Europe activities for ChemOrbis. Today we have an agenda that goes through some questions and issues, and I hope at the end of the presentation some of them will be answered, if not all, of course. So we will go through the price trends, the import-export trends, and how COVID has impacted on those in the last 2 years, and particularly focus ahead what waits for us in 2022. So first about ChemOrbis. ChemOrbis is a global market intelligence service agency that covers mostly the commodity polymers and the feedstocks, and also some of the derivatives that are coming more interesting in the recent period, like recycled polymers, biopolymers, and their feedstocks. One thing that is worth mentioning about ChemOrbis is the neutrality policy. We don't take part of any transaction, so we don't represent producers or buyers, and our methodology is very transparent. We carry out interviews, hundreds and hundreds every week, to check the real market prices, and we report them one by one with our members on our website. So fully transparency and neutrality policy. So in short, what happened in 2020 and 2021? We saw at the beginning of 2020, after the pandemic hit, the first result was halt in the economy, particularly in the second quarter. Then during this period, or just after the second quarter, polymer touched historical lows. They were not historical because even lower prices were touched during the 2008 financial crisis. But they just came second or very near to that. There was indeed a very strong bounce after the third quarter, starting already in the fourth quarter of 2020. And after that, during 2021, polymers and other materials became very limited in availability. Not only there was a crisis for polymers availability, the same was true for paper, for chemicals, for metals, for wood. Everything was short. Part of the reason of this shortage is due to the logistics distribution, which we mention in a second. In fact, the logistics, which is still under pressure, became an issue because of by the port congestions. You can imagine that the authorities, particularly in China, but also in other areas, they halted all the activities because of the quarantines. So this was limiting both sendings and receiving activities, but also limited the number of vessels and containers available. And still now it is a very, very big problem in many ports which are reported congested. We saw first the raw materials increasing, and also oil increased. And I said in the comment for now, because if we look later on at the oil forecast for 2022, it's still in downtrends. Of course, this day's events of geopolitical tensions are going to change the scenario, but I'll tell you what was the story before this week. The prices of polymers touched historical highs. This was really a record high in 2021, particularly around the second quarter. And of course, this impacted the financial management of all companies, both sellers and buyers. So the credit lines were stretched to the limit, because if you to buy the same volume, you need to buy a double price. Of course, this put into crisis everything. And most recently, the most recent issue, if we were missing issues, of course, was the energy price. Of course, after all the increases in the oil and gas and so on, also the energy prices, the utilities, I mean, increased a lot, and this caused a tremendous stress on the converters particularly, but also on the producers. We heard since several months now during 2021, producers applying energy surcharges, but also now the energy price is hitting the converters. And I heard of some converters not being able to let's say, tackle the high energy prices, so they had preferred to shut their productions. So, and this is going to get worse, of course. In 2022, what are the potential issues that are ahead of us? So again, we think about the economy. The economy forecast is foreseen as reduced in growth. It will grow against 2021, but still at a lower percentage, not counting on the recent developments, of course. That means that the demand will grow, but at a slower pace. So there will be less, let's say, demand for polymer for the growth we had in 2021 versus that growth. One of the major issues is the COVID. We think it is mostly behind us, but of course, there is always the risk of new variants, which we don't know yet the impact, and the spread in low vaccinated areas like Africa and other regions, which might again impact on the logistics, on the production, and also on the global economy. The logistic problems, unfortunately, when we were talking about it last year in 2021, we saw a resolution which was nearer, I mean, within the first half of 2022, but unfortunately, that's not going to happen. Probably the logistic issues will be there for the whole of 2022, mostly because there is a long trail of COVID, so port congestions, lack of vessels, lack of containers. There are new vessels, new containers being built, but it's not as fast as we would like. For us, the infrastructure that manages those exchanges are not easy to be implemented. I mean, expansion of ports or better lines and so on are not easy to be implemented very fast. It takes time, on top of money, of course. We have heard of inflation. Inflation is going to hit hard in some cases, and if it is moderate, inflation can be good. But when it is above 5%, it can put into very big trouble some countries and some currencies. In fact, the next issue is the monetary policies, where we saw recently at the end of 2021 also that soft currencies, depending on dollar mostly, were heavily devaluated. That means, can you imagine, like Turkey, for example, import volume is very important in terms of market demand, total demand of Turkey, and suddenly one day after the other, basically you see your cost increasing by 50%. It's very, very, very big problem for all the players, of course, not only for plastic, but all the economy of a country. And like Turkey, there are other countries in Southeast Asia or in other continents that are suffering this. And the energy costs are also a big question mark. The recent developments of the geopolitical tensions we heard this morning, of course, is going to boost these issues that were already very serious. So we will see what happens there in terms of oil, gas, and utilities. Anyway, geopolitical, you all know about it. Of course, I mean, I don't want to expand this, but of course, the more tensions there are, the more the prices of feedstocks and raw materials are suffering. Firstly, the oil and gas, but later on also the monomers, and later on also probably the polymer and all the derived materials. But I want to show you some graphs and charts now. Stop talking about these items of 2021, 2022 issues, and share with you some data that I derived from entirely from the ChemOrbis website. This is a 10 years history of oil and Nafta. It's interesting because I put on the graph the WTI crude oil, and the Nafta in Europe. I selected in another simulation Brent oil and Nafta in Europe, but you could see that Nafta was not tracking the price of Brent, but more likely the WTI oil price, which is nearly parallel to that. That's why I showed it to you. Of course, the scale for oil is to the right, and the scale for Nafta is to the left. But the timing, and you see the trend, the lines are really overlapping. So if you want to see where the Nafta in Europe will be, just track the WTI. Comment is that these were the prices levels above 100 and 130, $20 in some cases per barrel. Then there was a slow demand in 2017, 2016, growing up slowly. Then we saw the crisis due to COVID, second quarter. Here you see here prices touching historical lows, and then a very sharp bounce back driven by the economy recovery. And today we are already above 100 for the Brent, and probably WTI is also trading above 100. Is up and down around that level. And we soon will see also the Nafta trailing after it, of course, and ethylene and propylene and so on. For polyethylene, since we are talking about polyolefins in this presentation, we track the prices for different grades of polyethylene in 3 areas. Well, we track more prices, of course, but for the sake of this presentation, I reported the prices in Europe, China, and Turkey. Okay. So we can see that LDPE, which is the grade that suffered most and was more expensive grade of PE in the last 2 years, we see that this is year 2020 was well below $1,200 for the whole year, and then suddenly at the end of last quarter of 2020, prices started to go up. I want to draw your attention also to the fact that in China, it didn't go so up in absolute terms. In Europe, it went up to historical highs above $2,500, $2,600. But there is a lag effect, a delay effect. So when a spot market like China and Turkey touch their maximum, it takes another month or 2 months even for the European market to follow the same trend. So what happened here in February, March in Turkey and China happened in May in Europe, and then started to go down. And then you can see, for example, here, prices in Turkey and China are already on the uptrend since the beginning of January, whereas in Europe they are stable to decreasing, okay, even if they are at a very high level in absolute terms. Interesting also to notice in this graph, and it will be repeating also in the others, that in some cases Europe prices, and I compare here import prices, so you have to add other costs to make it a delivered price. So instead for Europe we have a free delivered price. So these prices here for free delivery Europe were even smaller than the import prices in China and Turkey, which means the explanation is that the economic recovery in Europe started later, and and the prices were not attractive to the exporters to import volume to Europe. So in some cases, Europe had smaller prices than the Far East and Turkey. Not happening now. When this happens, of course, it means that import volumes are diverted to those regions where they have a better profit to sell, a better netback. This is not happening now. That's why Europe hopes that the eventual imports will come to improve the supply situation for PE, but also for the other polymers. We see the same story about HDP. Again, we track from 2020 to February 2022. The prices, same trend, similar behavior, but HDP was less volatile, much less volatile than LDP. Means volatility is maximum and minimum price, so the range is smaller. But timing-wise is pretty much similar. And the last one is LLDP. Seems again similar trends, but in some cases you see the upward trend is faster in places like Turkey, and this depends really on the mix on polymer demand and supply demand situation on a region level, of course. And then I tracked on this graph just to show you how during 2021 prices were not linked to a basic, let's say, cause and effect between increase of raw materials and the increase of polymer price. In this graph, you can see the polymer price of LLDPE in Europe compared to the ethylene price in Europe. And the area here is the difference between the two price series. And as you can see, after the end of 2020, the polymer prices went up in Europe because of the supply-demand situation. There was not enough supply, very strong demand for the economy recovery, whereas the ethylene price increased, but not so much. And eventually they gave big results in terms of margins to the producers during 2021. Historical record profits, although they had historical record losses during 2020. So you need to compare the whole period before making a judgment. The most recent development is that the ethylene prices were going down on spot level, and prices staying high were making a recovery of the margin. Now let's look at the same story, but on the polypropylene point of view. In this graph, I track the polypropylene homopolymer grade in 3 areas, till January 2020 until February 2022, in China, Turkey, and again Europe. And as you can see, again, Europe price in some places more competitive or lower than other areas, so not attracting imports at all, and now is touching very critical highs, and it remained quite high until now, whereas in the other regions like Turkey and China, it went a little bit up and down. The crisis in Europe was particularly due to the lack of supply, even worse than about polyethylene. Although now is the other way around. I mean, polypropylene, we'll see later, are attracting a lot of imports in Europe, so the supply situation is getting better and better. Same graph again about polypropylene and propylene. So polymer price with monomer price. Again, record high margins during 2022, and lack of correlation between monomer price and polymer price. Now let's look at the imports and exports. First, I want to show you is the total import and export for China. And in this case, we start from 2010 until 2021, complete years. The thing is, the growth of China demand increased, and parallelly they increased also the imports of China, which are about in 2020 about 18 million tons of total PE grades. And as you can see, during 2021 we saw a very sharp decrease below. They lost more than 3 million tons. And at the same time, you see the little bar here, the yellow bar is the exports. They also increased the exports, which means what? Basically, this trend can be explained by the new build of capacities locally. So the China buyers, converters need less imports because there is local supply and huge and more supplies, more new capacities are in the pipeline for both PE and PP. Again, we see the same graph 2010 to 2021 in Turkey. Again, here, Turkey is very dependent, has local supply, local production, but very dependent on imports as well. Imports increase, but also export because of the addition of extra local capacity expansions mostly. And nearly about 2 million tons in 2021, and still a record in 2020 despite COVID. Now we look at the Europe. Europe is considered as EU 27. And I want to show you the last 2 years only because it's very interesting. So the blue bars are the imports, and as you can see and they are quarterly based. Okay, so four bars is 1 year basically, and we have the complete year published a few days ago by Eurostat. So this is I would say a good comparison. So during 2020, remember, the prices were not attractive locally in Europe, and therefore the local producer exported more than in the previous months. And at the same time, the imports decreased, which makes supply demand situation more critical. That's why prices suddenly in 2021 went up so high, and the industry reacted, of course, but it takes time to rebalance. And as you can see, the imports increased because of the high prices locally in second and third quarter of 2021, but decreased again in the fourth quarter of 2021. Now let's look at the PP story. Again, for China, you see the blue bars is the import, more or less stable around 5 million tons for the last 10 years, then an increase in 2020, even during COVID again, and a sharp decrease in 2021. 2 million, 3 million tons lacking of imports. And at the same time, this is very interesting because you see the exports increasing, even above 1 million ton last year in China, which is making this gap here. So again, this is the result of extra local capacities being built in China. And as you can see from this chart, it means that China is becoming more self-sufficient, more than PE even. They can afford to export polypropylene, maybe not to Europe or to the other countries, but to nearby countries, Southeast Asia and so on. They are very likely the target for their export, which will continue to increase also in 2022. Turkey. We see 2010 from 2021, imports growing from 1.5 million to 2.5 million. Again, exports are very limited, but imports are growing because of the country demand. Same story about Europe, like for PE. So we represent quarters, not years. First 4 quarters, you see the exports increase because other markets were paying better profits for the local producers, and at the same time the imports decreased. So you can imagine this is the perfect storm for the local converters, because suddenly the economy bounced back, and there was not enough material for them to be transformed. And we can see that because prices in Europe are now much higher than any other region, imports increased a lot, but not to such a level, probably because of logistics, not ready yet to deliver all the volumes. Remember, the logistics is not only you buy something and you get it after a month. In these cases, what was taking before a month to deliver from the Far East, 45 days, now it's 4 times, such that 120, 130 days. People are considering even to move volumes via railroad, crossing the whole Asia to come to Europe ports and then distribute it from there. It's actually a faster way than by ship today. Now we have to look at the last part of the presentation, which is the missing volumes, the supply-demand situation. So we will see the missing volumes, the new capacities, and the balance. We see it both for PE and for PP, and finally we look at the price forecast for the remainder of the year and beginning of 2023. So if we see these lost capacities, we represent the current month, which is February of 2022, prior 6 months and 6 months ahead. Of course, in these 6 months ahead, we cannot account for all the force majeure which are unexpected or the plant maintenances and turnarounds that will happen. But what we see is a huge impact, and you can see also the regions that are impacted, mostly in North Asia. The blue one, light blue, is North Asia. Europe is the tiny green here. So Europe is getting to a positive after April, May. Okay. And the situation in Northeast Asia should improve also in the coming months. The new capacities built, again, I told you that big capacities are being built in China, but also in Americas, okay? So this is the impact of the new capacities month by month, prior 6 months, the next 6 months. And what matters most is the balance. Of course, if you sum up the two things, missing volumes and new capacities, you get this kind of graph that shows you how in the coming months, particularly starting after April, May, the situation should be improved in terms of supply-demand situation. We get to the positive surplus of production, although the new turnarounds and force majeure maintenance will impact on this. These are the lost capacities for polypropylene, which are even more serious in some areas for polypropylene. We get the new build of capacities, again, more impressive in Northeast Asia and China, basically. And you see how China is going to be more independent from imports about PP. And this is the end result. So with the polypropylene, the supply situation should be improving even from March in certain areas. And therefore, of course, the supply increases, prices should be more, let's say, under not attention, but if supply improves, of course, prices are starting to level off or to even to decrease in some regions. So I will move now to the last part of the presentation. In ChemOrbis, we developed a model starting from January 2020. We publish every month what we think will happen to the polymer prices of commodities in the coming next 12 months. So we think that there will be up or downs or whatever, and we also list the factors that, in our opinion, will influence this trend. Of course, there are medium long-term factors like oil futures and energy futures, the new capacities we know, the seasonality, and the GDP forecast. These are the few long-term factors that are there to take into account. But most importantly, in the 1-3 months horizon, we have many more factors that can influence the prices, and other factors come in play. But of course, once you know what is impacting more the supply-demand situation, probably is 2 or 3 factors only at any given time. Is a Pareto rule, right? So in this particular moment, I think the offer, the supply situation is the most critical, apart from geopolitical tensions of when the energy are the two most important factors that are influencing the prices. And then let's look at the energy forecast. This was published a couple of weeks ago by the EIA. We report in this graph their forecast for the next 12 months until February 2023 for the oil. Of course, this would be totally wrong in view of what's happening nowadays. But at the moment they published the analysis, their forecast was based mostly for a decreasing trend for during 2022 for both Brent and WTI, and also natural gas, because of the increase of inventories. Remember, the economy will grow, but will grow at a slower pace than 2021 during 2022, and the production of oil can be or is foreseen to be increased to match this demand, but even to over exceed it. So naturally, the prices should be going down, of course, unless something else like what happened today is to be taken into account. Then, most interestingly, the PE price forecast. We have PE forecast for Europe and for Turkey. You can see the January. Until January, it's a historical price, what happened for the three grades, LDPE, LL, and HDPE, and then how we see prices developing in the coming 12 months. Mostly, we see prices going down on improved supply situation. Although it's interesting to say that, well, there are seasonal factors as well here in summertime and so on, but what matters is that Europe prices, as they are now, they are attracting a lot of imports. So if logistics will improve, we will see an immediate impact on prices and supply availability of PE in Europe. And also you see that HDPE, we see that will become, by the end of the year, the bottom price for the PE grades. Let's look at the same situation for Turkey. Turkey actually was on a decreasing trend since the last November 21. It touched a minimum in January, and in February prices are reported on bouncing back. Mostly again on supply, lack of supply situation due to the monetary issues that we saw before, so lack of imports and putting a lot of stress in the local market. Again, prices will go up until high season ends, and then they will start to decrease. But also for Europe, the decrease is not to pre-COVID level, so they stay quite higher, okay, than pre-COVID levels. Let's look now at PP for Europe. PP, you have to imagine that we see a decreasing trend since November also in Europe, and this is because PP imports started earlier to ease the supply situation. And the thing is, remember those 3 million tons that China doesn't need or didn't need during 2021. Basically, all the big exporters like Middle Eastern countries are finding a new home for those extra million tons that they didn't deliver to China. It means to neighbor markets, which are also Europe. And for PP, Europe is a natural destination for these extra tons. Same for Turkey. The increased trend again suffering a lot for until summer, and then decreasing, but not to pre-COVID level, quite high levels. And finally, the conclusions. The new capacities that particularly will be built in Americas and China are going to impact the trade volumes and the trade flows. So China particularly will need less PE and PP, and even export some PP to neighbor countries in Southeast Asia. North America including Canada, not only US, is very competitive. Through the shale oil, shale gas, they have very competitive ethylene prices, and therefore polyethylene is going to be their betting point, provided the logistics are in place to satisfy all the transfer of these volumes. As of now, even in Europe, we are in February, the imports from the US are not competitive. And particularly this new congestion, new things, new issues of logistics made the fees of transportation increase. So what was competitive maybe a couple of weeks ago is no more competitive. And the delivery terms are very bad as well, April, May, for the shortest delivery that you can get. But still, on paper, North America is very competitive in costs. Of course, Middle East is still a big exporting area. It means that it's becoming more important for Europe, particularly, and for Turkey, because extra volumes that they don't send anymore to the Asia countries, particularly China, will be finding a new way to Europe, easing the supply situation and eventually making prices go down in Europe. For the price trends, we saw that we are seeing a decreasing trend in Europe, although the level will remain high, not going back to pre-COVID level. And for Asia and Turkey, they are bouncing already until summer, and then foreseen as decreasing. Of course, you have to imagine that what is happening today in terms of oil impact and so on. This forecast was true until yesterday. So from now on, it's going to be new things, new factors that are going to take into account. So we don't know yet how things will move, but certainly in the coming weeks we'll have a clear idea. Although these big trends, the new capacities will be there, so big trends are not easy to go around. And finally, we saw that there are a lot of risk factors during 2022. The global demand, I mean, if the economy is not growing as fast as we want, of course, there would be lack of demand. The energy, oil not only, but also energy costs, utilities costs is there, the gas, the logistics, which is common to all sectors, but also for our sectors, petrochemical is very critical. And if that is not sorted, you have big volumes, but they cannot be delivered to your region, then it's like they don't exist. So supply demand is all depending on logistics. And we see that it will be there during 2022, the whole year. And geopolitical tension, well, you know what can happen, and it has immediate effect on oil prices. It's mostly psychological, but the psychological is becoming true because we see prices, and these prices are going to be paid sooner or later. So it means a lot of inflation. It means a lot of other things that we will know in the coming weeks. Of course, people are talking about sanctions, but it's too early to see the effects because they haven't been decided yet. So I cannot comment particularly on that. If you have any question about it, it's too early to comment, of course. So with this, I have finished, and I would like to see your questions. If my colleagues can help me to read them so that I can comment, please.
Yes, we already have a question from Mr. Tillemans that asks, will the high shipping cost temper the import from Asia to Europe?
Well, they are already, and the situation is not going to improve in the near term. As I said before in the presentation, we thought the issues were resolving until within the first half of 2022, but definitely the risk is there for the whole of 2022, which makes things much worse for products, not much polyolefins, because Asia is not a big exporter of polyolefins, but to Europe particularly. But for products like we depending a lot like ABS, for example, or other engineering polymers. So yeah, absolutely. Logistics is hampering the exports of Asia, both for timing and for cost. Making the cost of $15,000 per container is making the polymers not worth moving to other areas.
Yes, we have another question from Juan Carlo Gimeno. I don't know if you want to add something. He's asking, do you think that the Russia-Ukraine issue can change the values of commodities?
Oh, yeah, absolutely. This is, unfortunately, it's a whole new scenario. The geopolitical thing, think about first the oil prices above $100, and probably they won't stop there. So we will see impacting everything, not only polymer prices, but also the cost of living, so high inflations and so on, plus logistics, which are already so delicate, will be receiving another hit. So making things worse and not easy to recover. So absolutely, but the whole extent of the situation, unless of course a compromise or negotiations are cooling down the situation, which doesn't look like that in this moment. But I hope I am wrong, of course. This will have an impact, very heavy impact. Let's hope for all that the situation is going to find a peaceful resolution soon.
Okay, another one. We have Mr. Pikowski asking us if we have any forecasts on PP recycled market.
Unfortunately, we don't. First, let me comment what we mean by recycled products, because there is a lot of greenwashing or misinterpretation there what recycle means. Basically, in ChemOrbis, we started tracking prices of recycled grades since 2015 because we thought it was going to become an important part of the market, which is actually very true, particularly for regions like Europe. Even in the longer term, they think that there won't be any need for new capacities addition in Europe because the extra the higher rate of recovery of recycling of polymers. Now, having said that, what we mean by PP price or PE price of recycled grade, basically we think that when you talk about the price, you need to have a constant quality, which is very difficult for recycled grades. And when we report prices of recycled grades, we report the prices of the regranulated, let's say, refurbished, repalletized polymer, which can become coming from either industry or which is much more pure, so more expensive, or from post-consumer. And we report the two. So once we have a constant quality and we know what we are talking about, we report the price month by month because they don't change week by week. And for Europe and for Turkey, we have these prices. Now, if you think about polypropylene recycled, but also polyethylene, they will track, of course, the parallel to the virgin materials, but furthermore, in some regions like Europe, where by law, so the new regulations impose that you have to have a certain percentage in the packaging industry and so on by a certain date and so on, but mostly because of marketing purposes, where you can say 50% of this is recycled or 50% of that, or even 100% made of recycled material and so on. So there will, what I mean is that there will be a very strong demand, and to our latest projections, recycled material supply will not be enough to satisfy if all big major, let's say, brands move to this kind of recycled material policy. Which means if supply is not enough, prices will skyrocket. And we have an example already in the PET. I know we're talking about polyolefins, but PET prices for 100% PET recycled material are higher than the virgin since many months now. So same might happen also on polypropylene, but also on polyethylene grades of recycled materials if many major brands move suddenly to this kind of policy. But still, the virgin price is a trend setter. Okay.
And then we have another question. Could you explain tight situation with Exene?
With what? Sorry.
Could you explain tight situation with Exene?
Exene. Let me check. I didn't understand. Sorry, Margherita, I missed it.
Hexene, the low density, the linear grade hexene.
Hexene. Hexene. Okay. Could you say tight situation? Hexene. No, sorry. Hexene, as in LLDP C6. No, I cannot. I should expand more this, and I don't have a right answer to that. Sorry. I can provide. I saw your name, and I can provide maybe a detailed explanation afterwards. But Hexene, you mean LLDP C6? I presume, but you can contact me. You have the presentation my mail. You can send me a separate message, and I will be happy to provide any support if the information is available, of course. Next question, please.
The question from Marmirakis. What is your opinion for homo PP prices in March in Europe?
Well, it's contrary to PE prices in Europe. I can show you the graph that we saw here. I think PE prices. Okay, here. For March, we see basically before today a situation or events. We saw a stable to decreasing trend for March because of the improved supply situation, particularly for homopolymer, but also copolymer is improving. So in the short term, we see polypropylene weaker than polyethylene. Okay. Then some during the April-May months, there may be some pickup due to the seasonality, but for March, stable to down until yesterday. Okay.
Okay, another one from Mr. Veronese. Will the situation of additives, GF or FR agents improve?
Well, I don't have a. We don't track those chemicals, but I know that we talk about plasticizers, for example, in the PVC industry on our website, but all these chemical intermediates suffer the same situation as for polymers. So the new expansion, new demand growth, the bounce back of economy during 2021 caught by surprise many suppliers, many producers, and the capacity was not there enough. Plus, for some of these items, flame retardants or other chemical intermediates, we are depending on imports, and imports are not there. So logistics is impacting again on the lack of availability of these chemicals. Therefore, yes, we don't track, but as a general comment, I can say they suffer the same fate of other raw materials and polymers. So critical situation, critical supply.
Okay, and then we have a question from Mr. Agelakis that's asking, are you going to have another forecast update session later, for example, during the next month, due to the current situation of Russia and Ukraine?
Yeah, absolutely. The process, we publish our forecast and we publish it on a monthly basis because you see things are changing and they can change dramatically from month to month. First the oil forecast, but then the political tensions and other factors and so on. So what we do as a process is we wait for the EIA forecast of energy, which is happening usually within the first 2 weeks of the month. Once we have that, we put the data of the forecast into the monthly forecast of EIA into our model, and then we start speculating, discussing, evaluating, and so on. And generally, before the 3rd week of the month, usually towards the 18th, 20th of the month, we publish the report forecast for that given month, and the 12 months ahead, of course. And I imagine that March will be heavily hit by the geopolitical situation, at least for the energy part, and the long term as well will put logistics under pressure again. So a lot of combination of worst cases coming into place, and of course probably impacting on prices and availability of polymers and materials.
Brian is asking, what about primary raw material scarcity? Will this improve as many chemical plants have announced force majeure in 2021 due to the missing raw materials?
Well, let's say that the supply side of the market is strictly governed by the producers and eventually new producers. So they value very carefully what they can control, which is the run rate of their plants. And if we're talking about new capacities, you can delay them if the market is not responsive to accept the extra volumes, not to impact on prices. So the producers are very carefully controlling this. And there was a news, for example, today published by Orbis and sent to all, which were talking about polyolefin prices picking up in Asia, although not so rapidly as the monomers. But in the text there was a quotation towards very good, say, control by Korean producers of their run rates of their plants, to make supply-demand imbalance. So yes, definitely, the run rates, new capacities, startup, and so on is very well balanced by and controlled by producers. What they don't know, of course, is the demand side. And sometimes, like in 2021, took everybody by surprise for the strength of the recovery, so they were not prepared. So, but I think also that many plants, they have to be maintained once a year. So you can postpone 1 month, 2 months, whatever, but not for longer. Otherwise, you run heavy risks. So that part is heavily controlled by producers to balance demand, supply, and prices, of course. Imports play an important role, import-export in given region. But what everybody is, let's say, trying to understand is the demand development. And demand is not only one sector, but it's many sectors. Packaging, it's building and construction, it's automotive, it's electrical electronics, and so on. And they can have different situations for the demand evolution. But yeah, absolutely, the production is the first. Run rates and new capacities and so on are the accelerator or the brake of the producer to balance supply situation and prices.
Okay. Can you explain the sharp rise in prices for PVC raw materials? Do you predict that prices, he wrote will rise, but I suppose he he was meaning will go down after that.
Well, we have a dedicated webinar on PVC next week, so I encourage you, whoever made the questions, to join that. But yes, PVC is, let's say, a very interesting story because it's touching, again, historical highs, and in places like Europe is going up probably for 2 years now, more than 20 months, and not giving any sign of stabilizing or going down. And this situation today will also make things much more critical there. The thing is, for PVC particularly, is that supply demand was very, very, very unbalanced, much more than the polyolefins, and particularly because there was a very strong demand. So it was unbalanced because there was a high demand from building and construction and other sectors, which was not, let's say, taken in account in the planning of the producers. And prices are reflecting that. But we will talk more about PVC next week.
And now, Mrs. Kovaska is asking, is the COVID and maintenance infection level equal to people absence, lack of working force, the major blocker of improving situation in logistic? Or what is the biggest blocker of filling the logistic market?
I think it is very straight question, is the COVID, not related to the number of people working and so on, but is more so COVID related to the congestion of ports. So if you lock down a port for 2 months, it means all the vessels there, all the containers there are frozen. They cannot go, they cannot be used, they cannot go anywhere. Even the crews are there, they cannot. So it's COVID related. So as soon as COVID situation improves, and it is, let's say, for granted, then you will see probably an extra let's say, an extra boost for the economy recovery, and eventually a supply situation improvement in many import areas like Turkey, China, and Europe.
From another question from the chat, can we see the PP missing volumes by month once again? Thank you.
Yep. I think this is it. Yeah. We will be sharing the information with you. How we compile these graphs is pretty easy, and at service level you can include or exclude the monomer. In this case, I let both monomer and polymer included. So you see the result of the situation, and the light blue is again Northeast Asia, right? And imagine that the capacity in Northeast Asia and China particularly, there are a lot of capacities, but they are based mostly on carbon, on coal, right? So given the new regulations also in China for the pollution, environment, the air and so on, there are a lot of new capacities going to be built and impacting, but they may be limited by this kind of policy restriction towards pollution. But the trend is there, the new capacities are there, right? So.
Okay, we have the last one for now. How will the global emergence of sustainability affect the PE and PP market in terms of demand, availability, and price?
Well, that's a big question for all the players in the industry, starting from producers. Policymakers are making their choices without consulting us, because it's a group of us that are in the end making things happening, and therefore it's important that both policy regulators and those that provide the polymers and convert them into end manufactured things work together to find a solution. Sustainability is vital for the credibility of the industry. Even, I mean, if in every country plastics is seen as a major polluter, and the fault is not the plastic, it's because it's very durable. It's because of the not educated people who throw things in the environment, in the sea, on the ground, and so on. So sustainability will play an important role, but not in the short term. Short term is mostly marketing, but that as well can have an impact, because if big brands move to all recycled or major recycled things and so on, it would have an impact on availability. But think that for every country, for every region, macro region, and so on, the volume of the plastics production and demand is growing by the development of the economy. Usually is a factor, maybe 2.5 to 1.5 factor of growth versus the GDP of the region or the country, depending on how fast they're developing or from which level they're starting from, and the per capita kilograms of plastic per person will inevitably increase. What I mean is we still need virgin plastic, we still need new plants to be built, otherwise there will be a difficult situation ahead of us. The other thing we need for sustainability is to find commonly shared solutions for the recycled. Nowadays in the recycled, it's the idea of everybody. I mean, there is biopolymer, there are bio-based sources, there are recycled, chemical recycle, which I think is probably the best solution to go after for the industry, to have a clean image as well. But yeah, this has to be discussed and agreed with all the parties by the policymakers, so that the industry is not seen as a pollutant, but as a vital to the economical growth and well-being of all the people, and a big support for them. And finding a solution towards recycle is a vital part for that. And at least in Europe, we are leading that kind of policy, although there is no strict or available answer nowadays on how we will make this happen. There are a lot of ideas. There are a lot of certifying bodies. We certify how recyclable, how much percentage, and so on. But I think we have to do more, and Europe can be a leading region for that. So sustainability, absolutely, very, very important. It will have a price. You mentioned prices already in your question. Probably sustainability has a price. So, but like for other, let's say, features that were, or let's say, benchmarks that were introduced in the past, think about REACH or other certifications, food and so on, that were made by policymakers in Europe to defend their market from unfair competition. Probably this will happen again, because if we go towards sustainability solution for recycled material, it will have a cost, extra cost. Depolymerization is not cheap. I mean, and the efficiency is not so high. So if you want to use that kind of material in your production, you can do, but it is more expensive than using virgin ethylene from gas or from Nafta. Therefore, it has a price. So you have to have certifying bodies that tells you that polymer is coming from da 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 da. and not from another source and so on. Otherwise, it's the Far West. I mean, everybody is offering different and confusing. So you have a lot of greenwashing, and it's difficult. So that's why solutions have to be found between policymakers, producers, converters, all the association, and also once you have made this decision to defend this position from other tricks, I would say. Okay.
And now we have the last question. Can you tell us more about PP new capacity coming online? Show the chart again. Is it all in China?
Mostly in China, yes. Mostly in China. We have, this is the light blue here. Okay. When we have the reported capacity, we divide by the total plant capacity of the plant divided by 12 months, and we see which month is impacting. At any given date, we assume the commissioning and the startup and so on. So 2/3 are coming from China, basically. Then you have the black one, which is Middle East and Africa, still some expansions there, which is going to take place in 2022, and minor thing in Southeast Asia and in India. And this is only 2022. If you want the plan for the years ahead, 2023, 2024, 2025, we have the kind of information with the list of details of plans, capacities going to be built on our website. Again, if you write to me on my mail, I will be happy to provide the detail.
There is another question from Eric. What do you think about the big gap in terms of HDP price between Europe, China, and Turkey? Long-term perspective, will it be lower or the gap will remain?
Well, HDP is as you saw, forecasted as the cheaper grade in between the different grades. So it means there is oversupply, or supply is not limited for sure for this grade. And yeah, the gap is difficult. It depends really on local supply demand situation from the regions. The thing I can say is also that it cannot stay artificially high in any given region for a long period, because regions, they balance themselves. At this moment, for example, Europe is very attractive for imports. If it wasn't for the logistics, we would be flooded by imports of PE and HDP as well. HDP is the most common grade exported from Middle East, for example, to the Far East, and also to Turkey. To less extent, other grades, LDP or LLDP. Any other questions?
We have no other questions, nor in the chat, nor in the questions bot.
So we can stop the recording, and